Let's go to our featured guest of the morning. He's Ryan Lewenza, Senior Vice President and Portfolio Manager at Turner Investments, Raymond James. Ryan, thanks a lot for being here. It's great to have you with us.
Good to be here on this cold, wintry morning.
You bet. Microsoft, their rally has been remarkable over the past year. AI is part of the story, but probably not all the story. I think leadership is a big part of the story at Microsoft as well. What's your take?
This CEO, not so new, I think 2014, Nadella, incredible. Under Ballmer, the previous CEO, that stock was a great underperformer.
Right.
I will never forget, on the day of the announcement when Ballmer was out and replaced, I think the stock was up 10%.
Yeah.
Think of the hit to that person's ego. I think he ended up winning in the end because he's a huge shareholder.
Yep.
And he's now one of the richest men in the world. But this gentleman basically took Microsoft from PCs and their traditional Microsoft programs and then brought in cloud. Cloud was the first big agent of change in that corporation that really started to reaccelerate the revenues. And now the new story is the AI exposure that they have through ChatGPT and then some of their other programs.
Yeah, Ballmer seemed fixated back in those days on eclipsing Google in search, which seemed to be a lost battle. Nadella seemed to move right on from that into the cloud and subscription models, software.
That's exactly right. I mean, I don't know about you, but I do not go on Bing.com to do my search. So that was a wayward path. And then a new CEO. And again, that cloud computing. I mean, look what's happened to Amazon, right? It went from just being this online retailer. They start getting the cloud, a whole new revenue stream. He did the same thing. And so Nadella just seems to be at that edge ahead of everybody else. And so they were huge investors into this ChatGPT, well over $2 billion. And then, of course, as the Sam Altman controversy, as he was out, what was that, maybe about a month or two ago, was removed from the company by the other partners. Over the weekend, Sam Altman is now starting with Microsoft, and then by Sunday or Monday, he's back in. So I really think this AI exposure is why we're seeing it. But that said, I do have some concerns with this huge rally and now eclipsing Apple, and that is valuation. This is getting pretty pricey.
It now trades, let me see, I was about to tell viewers that of the 65 analysts who cover the stock, almost all of them, 59, have buy ratings on the shares. 59 buys, 6 holds, 0 sells on Microsoft, and an average price target of 418, almost 419 US dollars per share, compared to the close on Friday of $388 and change. The multiple, how would you value the company? A price earnings multiple?
I would use price or to a peg.
34 times.
Yeah, I got it at a 35 times. Apple's at a 28 times, so it is higher, but that would be justified because of the higher earnings growth. Apple is really starting to flatline on growth. Yeah, sure, everybody has an iPhone, but what is the incremental increase of iPhone purchases? No new products. So really, Apple was the darling in the tech sector, the go-to. Microsoft has now replaced that because of the higher growth potential. But at a 35 times PE, then you can look at a PEG ratio, so you divide the PE by growth. Still fairly expensive. But if I'm long this stock, I stay long. Clearly the technicals, the fundamentals look good, the momentum looks good. But one day, I think what's going to happen with some of these AI stocks is AI is going to miss. NVIDIA one day is going to miss on the growth.
Right.
And given the incredible rally and the valuation, that stock could be down 15%. Now, you never know when that's going to be, and it could continue to rise for some time before it happens. But you mark my words, one day there's going to be this change. Oh, AI is not changing the world, and revenues are not going to grow by 30% for the next 20 years, and we're going to see that. But I think that's still some time off.
What do you tell your clients on how much tech exposure or indeed how much AI exposure they should have?
You know us, we're broad-based investors, we're index investors. What we tell our clients is we have our exposure through our S&P and whether or not we're increasing it. Another way we would look at it is, do we add an overweight of just a tech ETF? And frankly, last year, I missed that. I did not. I was expecting a little bit of a bounce in the tech sectors given the big sell-off in the previous year. But I'll be honest, I missed that incredible tech rally, and all of that was catalyzed by NVIDIA. I go back to that second quarter, I think, when they came out and they just said, hey, there's this whole new business line, and that really ignited everything. And so if I could go back last year, I would have obviously introduced just a broad tech ETF to then get that exposure. But you can't catch everything. But where we're getting it is just having a good U.S. exposure, S&P exposure. Heck, that was up 27% last year,
Driven